What's going on? What's going on? What up, y'all?
Yes, indeed. Yes, indeed. We here, man.
Yes, sir, ski man.
All right, perfect, perfect. So we live, fam. It's like everything going good. Hey, man, if y'all in the chat, let us know some. We on the YouTube, we
Right.
on the Facebook. We may not see everything, but we're gonna try our best. If you join it from the Discord, definitely tap in with the link to Riverside. Hit us up in the chat if y'all got any questions. Yeah, let's get into it. So I'm about to share my screen. All right, boom. This lady, man. All right, so first seminar of the year 2026. We popping it off March
Facts.
1st. You know what I'm saying? How you feeling, my brother?
Hey, man, I'm blessed to be here, man. Blessed to be alive, man. Blessed to be out here in the markets. We doing everything, man. I'm happy to be here to give y'all some game, man.
Yes, sir. Yes, sir. Yeah, bro. I mean, I definitely appreciate you for everything you've been doing over the last few years, man. We've been doing this for a while. Um, like we're thinking Joel family, so for y'all that don't know, we're here to just give back more information as far as building wealth, generational wealth for your family, for yourself. And this seminar is going to be a monthly thing. So if you're in the Discord, you have full access to this. We want to make sure that we give y'all as much value as possible. There's a lot of Discords out there and a lot of groups that's not really giving us much value. And we just want to make sure that we're different. So if there's anything I could think of that y'all willing to learn, that y'all want to know more about, let us know in the chat or hit us up in the Discord or in the DMs. And we're gonna make sure we did that to y'all. All right. Bet.
Facts.
So for today's seminar, this is going to be strictly for beginner investing. Now, if you're already a seasoned investor, that's even better. You may still even learn something then. But we want to make sure that if you're out there, you don't know nothing about the stock market, that you can at least leave this seminar with some type of information. All right, and you could take this on, do your own research, of course, um, and yeah, take put everything in your hands so that way you can learn more stuff. Now, a lot of people really don't know how to feel about investing. When they hear investing, they
Word.
think they need to gamble some money away. They're gonna use more money or lose more money than they're willing to use. We're trying to clear all of those out. All right. It's a lot of fear behind investing. It's something that within the black culture we don't talk about a lot. And we want to make that a normal thing. Because if you're in a job and you've been working there for multiple years, you most likely have a 401k, which is a retirement account. And if you have that, you are still invested in the market, family. So why not take this into your own hands? You can learn more about it and what you're probably already doing. All right. So boom, let's get straight into it, fam.
That's a fact, bro.
Alrighty.
Wow. So, boom, y'all. First, we're going to get into exactly what is investing and what does it even look like. You know what I'm saying? When people say they investing into anything, what can that consist of? You feel me? So, the first thing we want to get into and understand is investing is pretty much the same thing as ownership. All right. Either it's you're investing into a business, you're investing into stocks, you're investing into crypto, you're investing into plants, cards, those really expensive, valuable cards, Pokemon cards, anything that goes up in value over time that you can consider yours, that's considered an investment. You feel me? Now, the type of investing we do, we specifically trade within the equity markets. All right, so we're buying everything as far as stocks, ETFs, and index funds. You feel me? So to break those down in simple terms, stocks is essentially we own a slice of one company. All right, so let's say for Thick and Gen Wealth, let's say I'm not even a part of Thick and Gen Wealth. I'm an outside investor, and Thick and Gen Wealth they do an IPO, an initial public offering, and they're allowing people to buy shares of them. And let's say I go to Mike, like, yo, Mike, I want to buy a share of Think and Gen Wealth. He's like, yeah, bro, I got you. Give me 5,000 or whatever for like 20 shares. I'm like, all right, cool. So that means now those 20 shares tells me that I am a partial owner of Think and Gen Wealth. You feel me? Now, Those are individual stocks. ETFs, on the other hand, are a different version of stocks that hold in a bunch of other stocks. All right. ETF stands for exchange traded funds. You feel me? And with these type of stocks, there are examples out there. I'm sure all of y'all have heard of either it be ticker symbol SPY or ticker symbol QQQ. All these things you could look up online. Those are considered ETFs, and they're pretty much a big basket of stocks that are specific to their niche, right? So, for example, the SPY is an ETF that tracks an index fund that we're going to get into that holds the top 500 companies in the country. So, this is, excuse me, this is what allows you to get instant diversification. You don't have to put all your money into Apple. You don't have to put all your money into Google and Nvidia. You don't have to put all your money in a Trump coin. You can go and buy an ETF like the SPY and get exposure to a bunch of different stocks at once. So that way, if they all crash, you don't lose as much money. But also, if they all go up in value, you still make a good amount of money, but not as much as you would if you were to invest into one individual stock like Amazon or some
Facts.
sort. I mean,
Facts.
now with index funds, these are pretty much like they the big OGs of the stock market. All right, these are pretty much things that track the whole entire market. All right, so the S&P 500 is an index fund, and that tracks the top 500 companies in the whole country. You feel me? And the SPY is like the little brother to the S&P 500. It's allowed to give more access to the stock market because the S&P 500 itself is like what 69 $6,900 or something like that per share.
Right up there.
And you got to, yeah, it's up there, bro. You got to be a certain type of investor to even buy into that. But with the SPY, you could be Joe Schmo down the block who sells lemonade at a lemonade stand and be able to buy a piece of the SPY. So that's the best way y'all could break up the market, y'all. Is understanding that stocks are the one piece of the market, ETFs are a bunch of stocks in one, which make up a bigger piece of the market, and index funds essentially track the entire market. All right.
Mhm.
And no matter what, there's always a way to get into something, specifically with ETFs that allows you to invest but at a safer way. You don't need to be Warren Buffett. You don't need to be all these people to be rich or smart. You just need a system. You feel me? And these different instruments allow you to create that system for yourself. We don't get into how to do that exactly as well.
Facts. That's a fact. So there's a lot of different there's a lot of different mistakes you can make as a beginner, right? And you want to make sure when you first starting off that you try to avoid these mistakes as much as possible. The first one that I usually always see, especially when someone is trying to get involved in the stock market, is they're trying to get rich as fast as possible. Now, am I saying you can't get rich quick in the stock market? No, I'm not saying that. But the odds of that happening is super low. It's almost the same as if you went to the casino and tried to get rich the first day you were at the casino. It's super low as well. So fast money stories, that's low key what brings a lot of people into the market. And that also what could bring a lot of people out of the market because they lost all their money. So it's important to realize that this is not a get rich quick type of deal. You need to make sure that you have that long term mindset, and that way you can stay in the game as long as possible and you'll make more money. Over trading is another thing that I usually see. Some people learn how to trade, whether it's stocks or whether it's options. Once you start to over trade, you start to constantly rack up fees. You may have to that may play a role in taxes, and then also your win to loss ratio will start to get even worse because now you may be taking more losses and you'll be taking wins because you're over trading, right? Instead of having that long term outlook. So that's a big deal. The next one is just social media. You may see plays on TikTok, Instagram, YouTube. Yo, I got this play I'm getting into 100x opportunity. You should definitely buy it right now. If you don't buy, you're gonna miss out on an opportunity of a lifetime. Just straight gassing you up about a play, and then once you get into the play, you lose all your money because you didn't do no research about it. We see this all the time. When I first started trading, I used to try to get into a bunch of these plays too because I have FOMO. So that FOMO is a real thing, family, especially when money is involved, and you do not want to have that. As easy as it is to say, it's harder to actually do that. All right. The next one is investing the money that you need. If you're investing into the market, this shouldn't be any type of money that you need within the next, year to 5 years. You really need to make sure that you're not dependent on this money at all. Because if you do, you end up taking money out. You'll probably end up missing on a long-term play because you needed that money in that moment, and then you're gonna be even more upset that you didn't hold. All right. So it's super important to make sure that you're investing with money that you do not need. The last one, which is something that I always see, is panic selling. Need diamond hands, all right? Diamond hands. Damn, if you don't got diamond hands, hey, no, I'm just playing. That's the thing with like the crypto, Bitcoin, the diamond hand talk. But it actually is a thing though when you have really good companies, as far as the Apples, the Microsoft, the Nvidias. Having them diamond hands is super important. A 10-year outlook. But panic selling is a real thing, especially when the market is dipping. All right. So, for example, with crypto, Bitcoin is dumping crazy right now. Imagine how many people are selling because they can't handle the volatility. All right. And what happened in 2022? Bitcoin went from 60,000 to 15,000. A lot of people sold. What happened after that? It went to 126,000. So it's super important to know how everything moves, to make sure that you're using money that you don't need, and to have that long-term outlook before you get into any investment. Because if you don't, that's when you'll be regretting it in the future, especially when something goes up from there. And one thing we don't want to do is try to time the market. Timing the market is the worst thing you want to do, and we'll talk more about that after.
That's a
All right,
fact, bro.
sir.
Now, everybody thinks also that this is a game that you need bread for. Alright? And don't get me wrong, you need bread. You feel me? We can't be putting in like a penny into the stock market. Like you need to have some type of reoccurring revenue coming in either on a bi-weekly basis, monthly basis to invest. You feel me? Absolutely. And if you have a lot to invest compared to someone who doesn't have a lot to invest, it definitely weighs in the favor of those who have a lot. But that don't mean that you just shouldn't do nothing. You feel me? That's the exact opposite of what you should not do. Because in reality, we can't really afford to not invest. Inflation's crazy. Feel me? We going There's whole geopolitical stuff going on right now. The dollar is losing value. We can't afford to not invest. You feel me? We have to invest any way that we can. And one way we can do that specifically is by doing fractional shares. You feel me? So for y'all that don't know what fractional shares is, we already broke down what stocks are and what shares are. We own a piece of a company, right? But the market is so accessible now that we can actually own pieces of a share. We don't even have to own one piece. We can have a point 0.5 piece of a share and still be able to benefit off of the growth of a company. You feel me? So a prime example is Amazon, right? Amazon is one of my favorite stocks right now. I think it's super undervalued. They're at about $209 a share right now, right? But I don't need $209 to get into Amazon. I could go with my Robinhood and invest $5 per day into Amazon to get me my fractional shares. So that way, when the company does go up in value, when the stock goes up, I can still reap the benefits of a capitalist market with investing into the stock market, even though I don't have that $209. You see what I'm saying? So that's why I say, y'all, it's accessible to everybody. It really is. You can have a dollar a day, $5 a week, $25 a month, and you can still be able to make money off of the stock market and build wealth. Does it favor the wealthy? Yes, absolutely. Because the more you put in, the more you can get out. But that doesn't mean that we can't grow that slowly and surely through compounding. If we could start off with $1 a day right now, who says next year you can't do $5 per day as you make more money? Who says the following year you can't do 20 per day? Who knows? Maybe one day you could do 100 per day. Maybe you become a hedge fund and I start going to you, be like, yo, invest my bread. You really never know. But the biggest thing about doing all that is consistency. And that's when you see the thing that we're talking about with buying per day or buying per week or buying per month. That's the thing that we call dollar cost averaging. We don't get into exactly what that is later in the view in the presentation, but it shows y'all, especially in this chart right here, that consistency beats the amount at any time. Okay? With this chart over here, y'all can see The top line that's going all the way up to the right, that's what happens if you invest $100 per month into a stock that pays you back 20% a year. All right. And to give y'all example of how percentages work in the stock market, the SPY typically gives you about 10% per year. Last year, Wolf and I, we hit for like 55% just through our portfolios. You feel me? So being able to get 20% of the market is very possible if you're picking your right corrections and you're structuring your portfolio correctly, right? But with $100 per month in 10 years at 20%, you'll have $38,900. You feel me? Almost 40 grand. It's crazy. All right, but let's say, you know what, D-Wall, now I don't want to invest in the market. I'm just going to put that same $100 per month into my savings account that's paying me a fingernail a day. You feel me? Throughout the 10 years, if you invest in $100 per month into a normal savings account that pays you no annual interest, you only have $12,000. So compare the $38,000 to $12,000. Let me do some quick math. What's the difference on that? I don't know how I graduated college. Shout out to ChatGPT. Let's say 39K minus 12, right? Y'all missing out on $27,000 in growth, all from just $100 a month for going to Starbucks every day. All right, for going to get your $5 biggie bag from Wendy's. What else? From going to buy your little gram of weed that don't smell good. You probably not even getting high from it. You see what I'm saying? It's
Bottles.
all about yeah, bottles. Lord, don't let me started on the sections and don't get me started on that. But consistency is key, y'all. And this chart proves it. The math is never going to lie to you. You know, I may lie, numbers may lie, not numbers. I may lie, your girl may lie, your husband may lie, Wolf may lie, your dog may lie to you, but these numbers is never going to lie to you. You heard?
Nope.
So consistency is key, y'all. Consistency is key. The timing is always going to beat time in the market beats time in the market every single time.
It's a fact. That is a fact. Yeah. Dropping.
Yes, sir, bro.
That so when it comes to investing, you need a brokerage account. So you need to make sure you're choosing your weapon wisely. All right. You don't go with the knife. You don't go with the shotty, the A. What you gonna use when it comes to investing, right? So one thing a lot of people want to know before they get started is where should they invest. Now we have our two favorites, right? And we actually advise you in both of these. And obviously, family, this is not financial advice, so please do your own research, all right? Now, in order to get into the market, you need a brokerage account. We always recommend for all of our beginners to also open up a Robinhood, all right? Now, Robinhood is the easiest way to get involved in the market. You can buy fractional shares. You do not have to buy whole shares. You can start off with $5, so it's a great way to get started, all right? The next one is Thinkorswim, and you need a Charles Schwab account in order to get on Thinkorswim. Now, the cool thing about Thinkorswim is that it's more advanced, so you can get into more charting, technical analysis, easier research, the streaming. You can have charts up everywhere. You can have them on your phone, your iPad, and your computer all at the same exact time. Now, some of the cons to that is that the learning curve may be a little harder for beginners, but all you need to do is just put time in on it. If you use it for a week, 2 weeks, you'll be able to get around pretty easy on it. Pretty easy on it. And there's a bunch of videos out on YouTube on how to use it. One thing that I do love about Thinkorswim is that if you want to get into trading and if you want to learn how to invest without using your actual money, they have something called a paper trade account. Now, the paper trade account is the best way to get involved in the market without using your actual cash. All right. Now, on Thinkorswim, you can also go back and trade previous days on the market, which is elite, fam. I can literally go back a month ago and I can trade how the market was trading last month and use fake money with it. All right. So it's a great way on how to get started, how to see how the market is moving, to make sure that you actually know what you're doing before you go out and use your actual money. All right, fam. Now, the verdict for the most part is to start simple with the Robinhood. That's for your ETF investments, for your Apples, your Nvidias, your top companies out there. And if you plan to explore more technical analysis, options trading, any of that, make sure you get into the Thinkorswim simulator. And then after that, you actually start to invest using Thinkorswim as well. Now, for example, what I do is I use Thinkorswim to day trade. All right. My more technical trades, all of that, I use Thinkorswim. And then my dollar cost averaging, my long-term plays, I use Robinhood for that. Now, it's really important to have multiple brokerage accounts. For example, I don't know if this is a last month, a few months ago, when we had that the internet outage with AWS. A lot of people couldn't get into the Robinhood accounts or the other brokerage accounts out there, but you were able to get into your Thinkorswim account. All right, fam. So it's super important to make sure that you have different options out there. What if something happened and you wanted to buy a play because it was on sale, but you can't get into your Robinhood account because the app isn't working or it's down? Like, this is a real thing that happens all the time. Even with GameStop, there was a time where you couldn't even buy stocks through Robinhood, or you could buy it on different brokerage accounts. So it's really important to make sure that you have multiple options out there, because if you don't, you could be stuck with the capabilities of one app. All right. So that's my little spill on that. If y'all have any questions about that, definitely let us know. But that's definitely what we recommend as far as the starters for investing and using your brokerage accounts. Yes, sir. My dog Ant here. Peace, family. Peace.
Yes, sir. Good to see you, my guy. All right, boom. So, beginner friendly strategies, right? How do I start this thing? Not today, but tomorrow when the market opens, right? First thing you want to do is you don't want to start off picking individual stocks, right? You want to set up your table. You feel me? You want to build your foundation. And the best way y'all could do that is through the ETFs we was talking about earlier. You know, the big stocks that have a bunch of stocks in them that gives you a lot more diversification into the overall market. All right. So some good ones that we love is the SPY, which we talked about earlier, tracks the top 500 companies in the country. VTI is also another ETF that actually tracks the whole market, like literally an entire market, from the smallest market cap to the biggest market cap to the smallest market cap. If you want to invest into the entire market as a whole, you can use VTI for that. Or let's say, you know what, I want to get into tech. I want to get into all the Googles, the Amazons, the Metas, the Nvidias. QQQ is an ETF that tracks, what was it, the top 100 tech companies in the country.
Mhm.
Feel me? So you want to start with those, yo, because picking in the individual stocks can be a little scary at times when you're first starting off. But also, let's say you a veteran, you know, you've been doing this, like my dog Ian, getting bread out here. You feel me?
Mhm.
What you can do actually is use these ETFs and look at their holdings to see which companies make up the most percentage of the ETF. All right. So to explain that further, let's say I'm a veteran. I'm like, yo, I want to figure out what's the best company to invest into. I don't gotta go reading all through the books and all the blogs and the Reddits and the Twitters. No, I don't gotta do that. All I need to do is go look up the SPY, look at their top 10 holdings. And if you do that, you'll see that NVIDIA is the number one holding of the SPY. It makes up about 9% of the SPY. So that automatically tells me that, hey, this is the most valuable company in the stock market right now, because the millionaire, billionaire, trillionaire institutional holders are all investing into it. So that's why you always want to start with an ETF. It allows you to get diversification, but also it gives you insight into what you should be buying when it comes to your individual stocks as well. So always start with ETFs. For me, now let's say I boom, I want to do the QQQ. I'm trying to be risk on. I want to get into all the stock. It's the AI boom, right? All right, cool. Let's do it. How do you do that now? Now I know earlier we was talking about, you know, buying on a consistent basis. Put time in the market rather than time in the market. The way that we do that specifically is through dollar cost averaging. You feel me? And all that is investing a fixed amount of bread on a regular schedule. Either it's daily, weekly, bi-weekly, monthly, whatever it is. If you picked $5 per day to go in the market Monday through Friday, either the market is up or down. You're gonna do $5 per day, Monday through Friday, for the whole remainder of the year. That's what dollar cost averaging is. And like it or not, y'all, a lot of us who have corporate jobs, who have 401ks or 403bs or whatever the case may be, we're all dollar cost averaging technically because every time our paycheck comes biweekly, a piece of that goes into our brokerage accounts through our jobs. So even without y'all thinking and knowing about the market, you're already dollar cost averaging without even knowing it, which is the beauty of investing. You can really just set and forget it. You don't gotta be the next Jensen Hong and build some crazy chips that's gonna bring Terminator robots over here. You don't gotta be Steve Jobs and invent these things that I can literally do everything on. You can just, hey, this guy looks like he does a good job. Let me go give him some money so I can get some growth on that too. That's the beauty of investing, y'all. You just set it and forget it. I swear to God, that's if you just do that with the right companies and the right ETFs for 20, 15, 30 years, you're gonna be Gucci. You're gonna be a millionaire by the time
Yeah,
retirement
easily.
comes. Easily. The boring investing makes money, y'all. That's all it is. It's setting and forgetting. That's what Warren Buffett did. That's what those quiet millionaires that you see going to the coffee store every day, that's maybe 5 million up. That's what they did. They just did it for a long time and they made a lot of bread doing it. You feel me? So don't overcomplicate it. Let's pick the ETF, dollar cost average into it, set it and forget it. You're good.
That's a fact. That's a fact, bro. I mean, it. I know when I first started, I was just strictly trading, 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 and I was like, you know what? Let me just try to invest too, see what happens. And when I did that, it made such a big difference. Like your base, your foundation, you're always gonna have something there, and that feels good knowing that no matter what. But I may have lost some money on this day trade today, but at the same as that time, I got a good amount of money still in my portfolio, so I'm always gonna be good, and
Right.
that just makes you sleep better at night. For example, when we did the dollar cost average and challenge, which was 2023, we did that. Yeah, we did the dollar cost average challenge, right? And we was doing $5 a day. So my grandma was like, I'll do it too. I got $5 a day I could do, and it's 5 trading days in the week, so that's $25 a week. Most people have $25 a week that they're able to spend on something. You're probably spending that money on something you don't even need anyway. And she did that. So she did $5 a day, right? I want to say within like 9 months, her account was over 2 grand. And she hit me up like, is this mine? Is this my money? I'm like, yeah, grandma, that's your money. Yeah,
Mm-hmm.
that's you. You ain't all you had to do was buy every day. She said, wow, okay. I didn't know it was this easy. Yup. Simple as that. You automated it and now look at you. You up. So it's really simple. You don't have to know nothing about the stock market. And like bro said, you're probably already doing this if you have a job. So why not put this in your own hands and make even more money off of it? Crazy.
Exactly, bro.
Now, it's a big difference between the long term mindset and the short term mindset, right? Now, what we're talking about, dollar cost averaging, holding on to a stock, that's long term wealth building. And then if you're looking to make money today, tomorrow, within the next couple of weeks, we call that trading. All right. Now, here's some of the differences between the two. When you're investing, trying to build wealth, you're looking to buy and hold quality assets for at least 10 years. Now, I kind of have some disagreements with that because this is the traditional way on how long term investing really works. But now we kind of have this more of an instant gratification, especially with the way trading is now. I kind of think that long-term wealth mindset when it comes to holding quality assets should be like the 3 to 5 year range, and then you reevaluate it. That doesn't mean after 3 to 5 years I'm going to sell it. No, after 3 to 5 years, make sure that the narrative is still the same, and if it is, continue to hold, and if it's not, possibly take profit, leave some there. You know what I'm saying? So that's the reason why I really say that because a lot of things have changed now from the traditional investment to the way things work now. Right now, also when you're investing, you want to make sure that you're growing with the economy over time. So when it comes to the SPY, which is the top 500 companies out there, you want to make sure that you're investing into America. Right? Are you doing a bet on America or are you doing a bet on a third world country like somewhere in Iraq or somewhere? You know what I'm saying? It's a difference, fam. And if you are going to continue to bet on the economy where you're at now, you want to make sure that you're invested to the stock market because that's where it's all based off of, right? And when it comes to the long term wealth building, you have a low stress environment, low time commitment. I'm not on the screen every single day looking at my investments. I'm sleeping at night because I know I'm in safe plays. I did my research. I'm in the SPY and they're making sure that those companies are top tier companies no matter what. So I get to sleep at night. I'm not stressing over it, right? And then historically, it's always proven to work. If you look back on a SPY chart going back 100 years, you are never going to see that the SPY has continuously gone down and never came back up. It's never been a case. It has always gone up. I tell the story all the time. Warren Buffett said he put like $10,000 into the SPY in like the early 1950s or something like that. 40, 50 years later, in like maybe around 2020 or that range, that same investment, if he did nothing, it was worth $50 million. 50 mil, fam. You know how much money that is? That's a lot of money. And all he had to do was just hold. So it's super important to just make sure that you have that long-term mindset and that you're using money that you don't need so that way you could benefit and your family and the next generation can benefit from that too. All right. Now, when it comes to trading, it's a little bit of difference. It's a skill, right? So you can't just not know nothing and just start trading. You need to actually learn and get better at it so that way you can make more money from it. And it's also not a shortcut. So buying and selling is frequently from the short-term gains. You're always having that short-term mindset. I'm not trying to be in here for multiple years. I'm trying to get my money, make my profit, get out. Now, there is a knowledge and a discipline that you need, and it's really hard. It's really hard to get that down pat. Even now, I have trades where I may hold too long and I may have not taken the profit that I should have taken. I was looking for 10, 15%, but I got it to 20%, didn't take my profit yet. That's just the human errors that we make naturally. You know, sometimes $100 is never enough. $1 million is never enough, and that's just humans for you. So that's just some of the flaws that comes with trading and making sure that you are disciplined. But with that being said, most beginners lose money trading because it's the same as that time you're trying to learn this skill that's super hard to do. So about 1% of people out there that is successful at trading. And if you're able to get the knowledge, the discipline, and the time factor down, then you will be successful. But it is easier said than done, right? And the other thing too is that it's optional. So you don't have to do it. But if you decide to do it, make sure that you actually take it seriously and you earn it. Because if you do become successful at it, it could really change your life. You can do it on your own time. You don't have to work for someone anymore. You can do it from anywhere in the world. And it just feels super rewarding once you do that down pat. Right. So one of the sayings down here, it says trading is optional. Investing is required. And I agree with this 100%, family. Like, no matter what you're doing, I don't care if you trade every day and you make $1 million. It takes one bad decision for all that to go away. It takes one bad health scare for you to take all that money out, and now you need to use it for some type of something that happened to you or a family member to bail them out or bail yourself out. So make sure that you are always investing because no matter what, your foundation will always be set. You can't build a home with a bad foundation, right? And investing will make sure that your foundation is always solid and never be broken.
That's a fact, bro. And another thing to add to that too with trading, y'all, is this: don't follow the TikToks, the RGs, the YouTube shorts, cause they all make it seem like it's mad easy. Like Wolf said, it is not easy. Only 1% are good at this. You feel me? Good at a long term basis. And the reason it is because with trading, you really gotta be a robot. You gotta follow your rules to a T. You gotta make sure your entry is good, and once you start seeing red, you gotta be cool as a cucumber. You feel me? You gotta be like, hey, you gotta be
Facts.
like Kobe in his prime. You gotta be able to hold because at the end of the day, that was your trade. If you believed it, you gotta have the conviction behind it. But it's not for everybody because us as humans, especially in this generation, we're emotional beings. You know, we're all human. So don't be letting these TikToks fool you, man. People gonna show you the green, but hey, them reds, look, them reds, even right now, I'll bet you your favorite investor is red somewhere. You feel me?
Hmm.
So Take that with a grain of salt, yo.
Facts. Yes, sir.
Mhm. All right, boom. So how you structure your portfolio, right? Let's say, yo, D1, I want to start today, bro. I'm gonna start investing today. I'm gonna try to invest in first, and then I'm gonna focus on trading down the line. What do I do, bro? Boom. Here's the general rule that I would say is the safest for any beginning investor, right? First and foremost, you want to be investing consistently, but you want there to always be capital available to you to buy. So when I say that, I mean when you go through your budget, either it's you and your partner or you and your friends living together, whatever. When y'all go through your budget, you want to treat investing like you treat your car note. Every month, money has to be going into your brokerage account. All right.
Facts.
Either if it's 25, 50, $100, whatever you can afford and you can live off the bare minimum of, invest the rest into your buying power. So that way you can actually see the crazy growth when it comes to the market and be in that category of those big people who can invest $1,000 into one trade. You feel me?
Hmm.
That's number one. Budget to invest. Budget like it's a card note, not like it's optional, because it's really not. It's really not. Now, when you will do that, let's say you got $1,000. Okay, I'm gonna put in $1,000 a month into the market. All right, cool. You big baller. 60 to 70% of that goes into ETFs. Low risk. This is your investing we're talking about. This is your retirement for you and your girl, you and your husband. This play is safe. Let's invest into things like the SPY, QQQ, or VTI. And honestly, you don't gotta invest into all three of those. You could really just pick the SPY. You'd be like, yo, 60% of my bread is going into this ETF, or $600 in this case with a $1,000 example is going into the ETF per month. Feel me? That's gonna be your foundation right there. Okay. Now the 15 to 20%. This is where we're gonna get put some gasoline on our portfolio. Feel me? We're gonna invest in some individual stocks. Now, like Wolf has said, I completely agree with him earlier. Instead of the 10-year basis, we definitely take a look at our account and our individual stocks at least 3 to 5 years in just to see if the theme, the thesis is still there. All right. But with the 15 to 20%, this is where you want to do the research behind the stock. All right. How they balance sheet look? What's the theme of the market? Right now, the theme of the market is AI. And yeah, AI, is this type of company invested in the AI somehow, some way? Are they fitting into that thesis? Okay. How is people using it on a daily basis? Is there a real world factor to it? When you go outside, and let's say for Netflix, we have an example of Netflix out here. When you go to your friend's house, you're all watching a movie, what streaming services are you using? 9 times out of 10, you're using Netflix. Okay. This is the type of research you want to do behind the company to see if they're really worth your capital. All right. If they're not, you don't want to be caught in a dead company for over a long period of time. It's just going to be a waste of time. All right. Our favorite stock specifically, just brought up Netflix. Love Netflix. We've been in Netflix for a bit, averaging in for a while. Microsoft is a beast. It's always going to be there, and they're very cheap right now with the charts. Nvidia, the best company of all time. I was just ranting earlier about how crazy they are. They're growing at 70% as a $4 trillion company. Are you serious?
Wild.
Are you
Wild, bro.
like? Are you yo, like, are you
How's
serious? Like,
that
this company's
possible?
ridiculous. How is this possible? Nvidia, people are saying they're gonna be the first $10 trillion company. And I'll jack it, because this is outrageous. All right? They outrageous. Nvidia's up there, man. Apple, all reliable. Everybody got one of these. You know what I'm saying? Regardless of what they say about Tim Cook, all this, that, and the third. At the end of the day, AI is a thing, and AI is going to be on here. And everyone has one of these. So they're playing factor in that for sure. Google. Google is Google. We all use search. We all use Gemini, which is a great product, by the way. Another great company. It's not going anywhere. O, which is a ticker symbol for realty income. This is a REIT, a real estate investment trust. And it's one of the best real estate investment trusts out there because they pay a monthly dividend. You feel me? So that means every month they're going to pay you for owning their stock. So that's a great defensive stock right there. Amazon, shoot, the most disrespected of the Mag 7. Great company at a great discount. Balance sheet is great. The only reason they're cheap is because the market's mad. They're investing in themselves at a high rate. But in my opinion, if I'm giving you money, I want you to invest that money back into you so that way you can make me more money. But the market
The
don't think that.
everything
That's
stock.
okay. That's the everything stock. Come on, you go on Amazon right now and go order you some. My girl just ordered some coffee pods for us for our Keurig. You feel me? What she buy it on? Do some Amazon. All right, come on now.
So,
Cat, we're talking construction. We talking anything building buildings. What do you see on the big cloud that's plowing all the snow over in your driveway? Caterpillar. You feel what I'm saying? Great construction company, not going anywhere. HD, Home Depot. You gotta go fix your roof. Your girl yelling at you because the sink's still leaky a bit. It's been doing that for the past week and a half. Where you gonna go get the tools? You're gonna go to Home Depot. FICO. We all got credit. We all got credit cards. Everybody got credit card debt somewhere, somehow, or had it in the past. Who controls credit? FICO. They create the credit scores. They create all the algorithms that the banks use. And they're at a great discount right now. They're not getting into technicals, but they're at a very strong support line. That's another solid company. This is the type of research you want to do behind these individual stocks. Do they got a clean balance sheet? Do they make sense? Do people actually use them on a daily basis? And do they fit the current theme in the market? And all these companies right here, they do somehow, some way. You feel me? So you want to dedicate 15 to 20% of your portfolio towards these individual stocks. Allegedly, this is not financial advice. Talk to an advisor. You feel me?
mm-hmm.
Next, crypto. Good God. For y'all that don't know what crypto is, whew, it's high growth digital assets. All right. So you hear about Bitcoin, Ethereum, XRP, Stellar. These are all digital assets that have essentially are now a part of our economy. You know, a lot of institutions are heavily invested into these type of products, and they're not going anywhere now because of that. You feel me? But of course, it's very high risk, as we just seen with Bitcoin. Bitcoin was at 124 the other day, 124,000. Now we're at 60,000. They pulled back almost 60%. And that's the nature of crypto. You are going to see crazy gains. You are going to see crazy drops. But that's when you got to show your nuts a little bit. You got to understand what you're investing into and stick with it if you firmly believe it. You feel me?
Mm-hmm.
So for me personally, no more than 10% of my portfolio is invested in the crypto because I know that shoot down the line we could see something like this. But now, in my opinion, is where you buy at. Okay.
Mm-hmm.
Last but not least, options and active trading. And I'll say this varies. Okay. I say 1 to 5% for options and active trading if you are just starting out. Because with options and trading, like we talked about, like we said, it could be your best friend if you stick by your rules and become a robot and become good at the skill, or it could be your worst enemy and it'll have you file a bankruptcy. Not
Mm-hmm.
gonna lie to you. Okay. So if y'all don't know what options trading is, it's essentially, well, let's say Think and Gen Wealth goes public, right? And I'm like, man, I wish there was a way that I could have 100 shares of Think and Gen Wealth, but only for a short amount of time. I know Think and Gen Wealth has a big conference coming up, so I know the stock's gonna run up. But I don't want to hold the stock. I don't want to buy the stock for long term. I just want to buy it for a short term and then sell it after the conference because I know it's gonna go up, and I want to add some gasoline on top of it for me betting and getting right that it's gonna go up in this short amount of time. That's what options is. It's essentially might come to me, yo, D-War, I got exactly what you need. Here's a contract that's worth 100 shares of Think and Gen Wealth. This contract expires in September, on September 5th. So, and our conference is in August. So you can sell it in August, and if you get it right, you can make double than what you could have got by just buying shares if you sell right and buy at the right time. Let me know what you want to do. And I'm like, bet, good looking. I'm wilding. Give me 40 of those contracts. All right. Now let's say it goes good. Boom, I sell the contracts. Conference goes great. Stock goes up 20%. But the contract I got, it went up 100. Now I'm big balling. I don't know, wherever you want to go. I asked my girl where she want to go. We're gonna go somewhere. You feel me? But let's say it ain't go that way. Let's say Nas said The stock drops 5% after the conference. Now your contract is at what, -60, -40 maybe?
Yeah.
Now you're like, damn, now I'm mad at Mike. Now I'm like, yo, Wolf, what happened? I thought the conference was gonna be good. Mike will be like, hey, bro, you knew what you signed up for. I told you the terms of the agreement. That's what options and trading is, y'all. And like Wolf said before, it can be very powerful if you develop a skill set for it. But when you're starting off, let's allocate at least 1 to 5% of your options. So God forbid you do make that bet and it doesn't go your way, at least it's not the house.
Mm-hmm.
But as you get better, you get more confident, you establish your system, you talk to the right people like Wolf and myself, maybe that can go up to 10%. You know what I'm saying? I wouldn't go over 10% personally when you come to mixing it with your investing portfolio. But hey, as you get good, maybe you open a separate portfolio like Wolf does, specifically for options. You see what I'm saying, y'all? This to me is the safest way for you to really build your portfolio and establish something that's long term rather than this short term, next day rich type of thing. At the end of the day, that's not what we're here for. We're here to build wealth. You feel me?
Exactly. Exactly. Yeah. Bro, dropping. Hey, all of that was on point.
Yeah, bro. It's crazy out here, man. Gotta be smart.
Mm-hmm. Got to. Yeah, family. So we definitely want to give y'all some takeaways. If you listen to this whole entire thing, if you go back and watch it, we want to make sure that there's 5 things you take from this, right? The first one is to start small. Even $10 in the market beats zero. All right. The habit matters way more than the amount. There's stocks out there that you could have bought for $5, $10 that maybe hit $100, $200 that you can now divvy up that money and make more money with it. So having something is way better than nothing, right? Next is the consistency piece of it. The monthly contributions, the automated investments, making sure that the engine is constantly going and is being fed. The long-term wealth aspect is always going to outpace anyone else's strategy. All right. Like I said, Warren Buffett put in a $10,000 investment in 1950s is worth 50 million, over 50 million today. $10,000, family. So it's super important to make sure that the consistency piece is always going to be a part of your strategy, right? Think long term, the 3 to 5 year outlook, and then so on. All right. The market rewards patience. You can always zoom out and realize that, over time, my investment had compounded this much every single year. That chart that bro showed earlier, do you want to have $12,000 after 10 years, or do you want to have almost $40,000 after 10 years? That's a difference. A lot of people are going to say, yo, I think I want 40,000, bro. 40K. I mean, that's a lot of money. Yeah, I know. So it's real important to make sure that that long-term outlet is always going to be a part of your repertoire. You know what I'm saying? So always have that there. Now, next is avoid the hype. Ignore all of the social medias of somebody driving the new Lamborghini Urus or in the Cybertruck because they just made money off of a Tesla call option. Like, avoid all of that. Make sure that you understand what's going on first, that you are always following you and you have your own rules and you're disciplined to what you know. Because if you did that FOMO and you start to jump in and do stuff that you're not used to, or you go out of line, that's the easiest way to get out of the market. It's the easiest way to blow up an account. So boring is always going to beat the flashy plays. All right, fam. Lastly, is owning real assets. Stocks and ETFs represent real companies. You're building ownership, fam. You don't have to be the person that's the one actually calling all of the shots. It's actually better if you're not that person. It's more risk. So why not be the person that just puts in a couple of dollars and you benefit from it, right? You're not trying to be lucky. You're not betting on red or betting on black, hoping that the number hits on the roulette table. None of that is happening right now. You're not chasing any type of luck. These are actual numbers, actual results, and you're actually benefiting from it. And you're not going to be the only one benefiting from it. You're going to benefit, your family's going to benefit. And if you do it the right way with the right long-term outlook, the next generation will also benefit as well. So This is definitely the 5 core takeaways that we want y'all to have, no matter what you took from this presentation. And if you could do this every single day, and if you could learn this and just be a boring investor, fam, it's gonna change your life, fam. Swear to God.
That's a fact, man. It's gonna change your life, y'all. All you gotta do is do the simple thing, man. Like Wolf was saying, we don't chase the flashy stuff. We just do the simple thing that makes sense. You feel me? We do that for a long time. That's how you win in this game.
Mm-hmm. It's a fact, fam. Yeah. I mean, that's really all we have for y'all. We try to make it under an hour. We want to make sure that this last part is for any questions. If y'all got anything, definitely let us know what y'all think in the chat. We're gonna chill out for a little bit to see if there is anything that comes through. We're gonna check the YouTube, the Facebook. Let me double check here as well.
Facts.
Yeah, man. I'm glad we got that under an hour. I didn't know if we was gonna be able to do it. We did it though.
I ain't gonna lie, me neither, bro. You know we get passionate. We start,
Exactly.
I don't know how we did it, bro.
Nah, that's a fact. We definitely do, bro.
Check on the YouTube.
Let's see here. Yeah, and a lot of people also may be wondering just while we're just checking out everything to see if there's any questions that go through. Some people may be wondering, right? Yo, what's going on with this war that's happening? Is it even worth investing right now? Family, I'm telling you right now, there's been plenty of wars over the history of the stock market. You had World War One, World War Two, Vietnam, the war in Iraq, all of the different attacks that we've had, the attacks that happened on us, 9/11. The market has always gone up, fam. If anything,
Always.
this is the best time to buy when there is uncertainty and fear, because you are going to get what's called a discount on anything there. So if you see any type of fearfulness in the market, if you see the market red and you haven't even got to the market yet, I promise you that is the best time to buy. Because if you do that, once all of the smoke clears and everyone's back to doing what they do and everyone forgets about what happened before, just like humans always do, we tend to have that short-term memory. You will always benefit from the stock market if you just buy no matter what.
Always.
Right?
Always, yo. And there's always gonna be fear of like, oh, it's over, everything's going to zero. I remember when the Liberation Day happened. I was actually having a conversation with my brother of mine, is my
Mm-hmm.
God, and he was saying like, yo, it's over, bro. Like, I think it's done, bro. The U.S. is done. Stock market is done. I was like, nah, bro. I'm putting everything on the line. I'm in the market. He said, bro, that's risky, bro. I don't think we come back from this. And we
Right.
hit all time highs a month later. Literally,
Bro,
yo,
and
it's
it happened so fast.
hmm so fast, bro. Like literally a few weeks, not even a full month. It was a few weeks. We was back to all time highs. So like the moral of the story I tell everybody, y'all, is if we could come back from '08, because I don't think people understand how bad '08 was. Like '08 was a whole like global catastrophe. Like it was
Mm-hmm.
about to get bad if we didn't bail out these banks. You feel me? But if we did it, boy. So if we could come back from that, we could come back from anything now. Bro, I say it all the time. Thanos could fall in my parking lot right now and be like, yo, the stock market is going to drop. And he could force the whole market to drop. And I'm still buying it there. Thanos ain't got nothing on the spot.
Literally, even
Word.
after the snap, I hit. All right, bro, you forced it. Let me buy this stock right now. You forced it.
Everybody's God
Yo,
damn, it took away all my gains. God damn, yeah, buy this dip now. God damn it.
nah, that's a fact, bro. You ain't lying, bro. It's crazy, bro. I mean, it's one thing that's always been proven before we was born, before your grandparents was born, before your great grandparents was born. Like it's been here that long, fam. So why not just keep going with the system? And we just was talking about this with one of our clients that we work with. Like, bro, the rich, you think the rich is going to do something that's not going to benefit them and their family? Let's talk about it, right? It's billionaires out there that invest into the market. They've probably been rich for the last 4 or 5 generations, and those previous generations invested into the market. So why not follow exactly what they're doing? You think they're trying to make sure that they go broke? You think they don't make the wrong decision? They're all it's all a circle with them. So why not follow exactly what they're doing? You know, how can you fail if you're doing exactly what the rich are doing? You can't.
And the book's already written. We just gotta press a button. We don't even gotta read it.
Yeah, it's easier for us now. Way easier.
Way easier with AI now and everything, man. Like, listen, y'all, we got it light now, so there's no excuse no more, man. If money is tight, like I said, start with $1 per day. Everyone got $1. Someone
Exactly.
got $1.
Right, I will hope so. You know.
Get $1. Yeah, facts.
Yeah.
Yeah, man.
Yeah, it's a fact. I mean, I've been looking through everything. I think we good. I mean, even the questions that people had in the past, I'm hoping that we answered everything. And if we didn't answer some that you may have concerns about, questions about, hit us up in the DMs. Hit us up in the Discord if you're already in there. If you know someone that's looking to get help on their investing journey, send them over to us. Family, our Discord, somebody just told me that our Discord is probably the most affordable and beneficial thing they've ever had. Like, you talking $25 a month, right? I've had people that jumped into this Discord and they made $100 in 2 minutes, pressing a button, buying a trade. And it's like, damn, bro, I just made my money back. When they was in Discords that was charging them $200 a month, and it was losing money. So it's a bit different, and we're here talking to y'all. Y'all can actually communicate with us. We're not going to tell you to join and then we just leave y'all hanging. No, it's so much different. It's so much different when you have someone that really thinks about you. We're trying to make sure that you provide for your family and provide for the family, but after you. You know what I'm saying? Because nobody taught us this stuff. So we really just want to be different. We want to make sure that we give y'all all the information that's not out there because it's a lot of gatekeepers. And that's the last thing we want to do for y'all. We open in the gates. So let us know what y'all think. Let us know if y'all have any comments. Let us know if there's any topics y'all want us to touch up on in the future because we don't do this every single month. Yeah, family, we're here for y'all.
We're here for y'all, man. It's been a pleasure, man. Y'all, like I both said, man, y'all got any questions, DM, hit us in the Discord if you in the Discord. If you're not in the Discord, hey, man, get it together. I ain't gonna lie. Get it together.
Respectfully. Show my brother. Respectfully. You already, fam. Hey, appreciate you, my brother, for everything you do. Enjoy your Sunday. Yeah, we here, man. Enjoy your day, man.
Vice versa, man. Love y'all.
All right, brother.